Difficult times calls for difficult options, but sometimes they can actually be great ways to sort of bridge you until you have your financial resources back in order. One of the things that I love to do is suggest that you consider something what I call profitable shopping. And it sounds really corny, but what it is going through your budget, your line item, and figure out areas that you can deduct or get on discount. For example, car insurance, right? For many Americans, you've had car insurance, you're paying for it, but many Americans are also driving about 90% less than they were a few months ago. And yet they're paying the same amount or close to it for their car insurance. This is a great opportunity to shop, to give calls to different car insurance companies, figure out how you can get your rates down. Obviously, you're driving a lot less, so you can do that. You should also go and look at things like your internet package and your cell phone package and your homeowner's insurance, because when you're working in the office, you oftentimes don't have time to shop around and find a better deal. The other thing you want to do that's really important right now is if you're in a situation where you still have income, I highly recommend looking into setting up a home equity line of credit for those of you who have equity in your homes. The nice thing about that is interest rates are at an all-time low, and you can still capture some equity in your home. It gives you some breathing room in case you get in a situation where you lose your job or you don't have income coming in and you're just short that much. You can actually temporarily borrow at a more preferred rate rather than having to tap your retirement assets. So if you're looking to borrow an unsecured loan, in most cases, that also means a pretty hefty interest rate. And that can really put havoc on not only your future financial needs, but your present financial needs. So I would be very, very careful to do that and really look at different options and see if there's any other ways that you can access funds without going in that direction. Actually, I think that you actually will see loans in the double-digit interest rates, like over 10% in terms of interest is just way too high. You're definitely looking for loans that are less than 7%. And if you can't, then what I would suggest is first literally go around the house and look for things that you can liquidate into cash. See if things that you can sell today or quickly, because what you don't want to do is if you get yourself in a situation where you're paying double digits in terms of interest, that interest will just continue to ratchet up. Now, if you're in a situation where you still have income, you still have a paycheck, but you've got that credit card debt, take a look at different credit cards and see if you can find a 0% card to be able to transfer that debt over. And then again, systematically, consistently continue to chop that debt down. Pay it every single week if you can, every single month, and try to get that down to zero as quickly as you can. At least that 0% interest will help you temporarily, but really be mindful that that can change pretty rapidly as well. So as much as you can, decrease your spending, only focus on those things that you absolutely cannot live without. Everything else should not be spent on right now. For many of us, we're looking at our 401ks and we're looking at a much larger balance of assets than in many of our other investment accounts. And we're thinking, well, maybe, just maybe, if I really need money, I'll tap my 401k. I'll borrow from it or I'll take a withdrawal from it. The difficult thing about doing that is this could really create havoc on your future retirement needs. I'll see clients that tap their 401k, most of the times they never pay themselves back. So that's a real problem, because I'd rather you struggle a little bit more when you're younger, when you're in 20s and your 30s and your 40s, rather than in your 60s, 70s, and 80s, where it's harder to bring in income. And that's when you really need that financial security. So in many ways, the 401k should be seen as your last resort.
Invest in you. Ready, set, grow. CNBC and Acorns.